This chart represents a market that for years ran on pure sentiment. Tokens spiked on rumors, crashed on tweets, operating without measurable economic foundation. But as the market matures and institutions step in, that volatility flattens out into a strict demand for assets that solve actual problems. We can see what Wall Street expects by looking at the S&P Pantera Digital Asset Index. This index evaluates blockchain networks the exact same way traditional finance evaluates traditional businesses. This rubric outlines exactly what the index looks for. To be considered, a digital asset must pass a strict test. It must demonstrate real-world utility, generate consistent revenue, and prove it can sustain economic activity over the long term. Institutional capital is bypassing digital assets that act like lottery tickets. They are looking for networks that function like self-sustaining economies. The problem is that most existing blockchains fail this test. Many rely entirely on token inflation to reward participants, rather than generating actual commercial revenue. Kira Network was engineered specifically to solve this structural flaw. Right now, Kira is in a unique position. The development of its architecture is complete, but it is currently waiting in a pre-mainnet state. We can examine the fully finished blueprint before the network goes live. So if we take Kira's completed architecture and run it through the S&P Pantera rubric, we can see exactly how it measures up against these strict institutional standards. The first institutional metric separates tokens people merely hold from tokens people actually need to operate a network. Many projects launch a token and then scramble to invent a use case for it later. Kira reversed that approach. They built the economic infrastructure first, making their native token, KEX, an absolute requirement to keep the network functioning. KEX functions as the network's primary operational tool. It secures the blockchain, drives consensus, fuels governance, and provides the necessary resources to execute RollApps. Because the token is deeply embedded into the infrastructure, demand for KEX grows in direct proportion to how often the network is actually used, rather than relying on market sentiment. Moving to the second metric, traditional investors look for infrastructure that earns actual fees based on its usage. This structure illustrates how Kira handles that requirement. Instead of relying on a simple token printing mechanism, Kira rewards its network participants through three distinct independent revenue streams. The first stream is block rewards. Consensus nodes receive newly minted KEX for securing the blockchain. The second stream comes from transaction fees. When users interact with the network, validators collect those fees, paid in a basket of different assets, directly tying their revenue to real network usage. The third stream is the RollApp economy. Applications built on Kira generate swap fees. A portion of those external application fees flows straight back to the consensus nodes. This multi-stream engine aligns validator income directly with the commercial success of the applications running on the network. It mirrors the diverse revenue models of a traditional, profitable corporation. The final institutional requirement looks for mechanisms that ensure long-term ecosystem growth over short-term price spikes. Kira addresses this through a universal basic income module. Instead of random inflation distributed blindly, Kira directs capital towards specific, measurable objectives, like strengthening network security or funding community initiatives. The network also utilizes state grants. The Treasury can allocate staked KEX to bootstrap new validators, lowering the financial barrier to entry and ensuring the network remains decentralized as it scales. By treating its token supply as a strategic treasury to actively fund measurable network participation, Kira successfully passes the final test of the rubric. This blueprint represents an important reality check. No project is guaranteed index inclusion, and a theoretical architecture, no matter how precise, is meaningless without execution. Because Kira is currently pre-mainnet, the broader market is still waiting to see this protocol operate at full scale. Once the mainnet launches, index providers will demand hard data. They'll look at actual transaction volume, real RollApp adoption, and true fee generation to verify that the network performs as designed. If Kira executes its roadmap and achieves that adoption, this architecture could become the definitive model for institutional consideration. Institutional standards are moving toward networks that prioritize measurable revenue and utility. Kira's architecture is built to meet these specific requirements, placing it in the path of new criteria set by indices like the S&P Pantera.